Hello there, this is FairBuyNovyOptions.com, and we have in front of us the US dollar Japanese yen here on the 9th of May over the weekend on Saturday, with still ranges, still market not going anywhere, and of course still frustrations. But I would say that frustration is coming from both bulls and bears, as picking up an expiration date on such a currency pair, and in such conditions it's quite difficult. I would say that we are running out of time, and now that the jobs data that was released on Friday is behind us, the focus would be on the end of month trading and the next jobs report, as this one was somehow in line with expectations. The Federal Reserve in the United States is going to meet next June, and if the NFP in June is going to prove or is going to show a negative print, or let's say will not confirm expectations, will not beat the expectations, then there's no way that the Federal Reserve is going to raise the rates anymore. I would say that the whole pattern or the technical picture started from this moment of time, like this, and we have the following structure. We have a wave A to the downside that ends here with a triangle, then a B wave, and then a C wave in here. Now this is an ABC that ends with a falling wedge. This is the falling wedge, but the falling wedge, as you can see, is not being completely retraced. This is what we need to have for the falling wedge, as it is a terminal impulsive move, and terminal impulsive moves are always 100% completely retraced. So what do we have next from this moment on? We have an X wave, or we need an X wave. We have something like A, a B, and a C, our X wave, in 1, 2, 3, 4, 5, the X wave, and then nothing but an A and a B. Ideally, this should be the C wave to the downside. What I'm trying to say is that we are sitting on a first wave that ends here, a first wave of a bigger degree, and then we are looking for a second wave to end here, but on the lower degree, this is the second wave, so on the lower degree this should be as wave A, so we could just label it with a different color. Let's make it in blue. So wave A, the B wave, and the C wave to the downside. The X wave all the way here, in here. So A, B, C, and then the X wave, and then we have nothing but a wave A to the downside, a B, and a C of the same degree. And just like that, we might say that the second wave is down. So all eyes now should be on what? On 120.84, because the terminal impulsive move here, or at those highs, it is still not retraced. So 120.84 and 121.20, as this would be where the highs in the previous first wave are going to be retraced, this one in here. So when market ends with 119.77, all we have to do is to buy call options, and I would choose two expirations date for this pattern. I would go with end of week and end of month expiration date. For both of them, the binary option brokers you can find are offering 1710 GMT expiration date on end of week and end of month for US dollar and Japanese yen. Thank you very much for being here. Have a great day. Make sure you check FairBuyNovyOptions.com. Make sure you check our Binary Options Academy projects in there that we develop for you, both technical and fundamental analysis. And of course, check us regularly. Bye bye.